Trend reversal patterns Forex is the topic today. However, let me be clear that this will work with other markets as well, not just Forex. So stocks, futures, commodities, whatever. But today, we're going to just use the Forex market as an example. Euro, US dollar, of course. All right, so the topic of this 5-part series, and this is the last in this series, by the way, is how do we determine if we should stay into a trend? In other words, the trend will continue, let our winners run, or if the move against the market is just a weak retrace and that the trend is going to continue to go, or obviously it's going to end and perhaps even reverse. Right? We're assuming a trend. It's right in there in the topic of this series, trend reversal or trend retrace. So what I'm sharing with you in all of these videos doesn't apply to sideways markets, choppy markets. It's for trending markets specifically. All right, and so this right here is a trending market. We've been moving up for a while. It's we've got, in other words, we got a little higher high here. Okay, well, this is the 15 EMA, by the way, this black line. Okay, and up, and up, and up. And so we've been in this trend for a while. And the question is, well, should we stay in or should we get out? Is this move down now? Is that going to be just a shallow retrace? And then after that, it continues to go in, or go up, so that we should stay in the trend? Or should we get out? So these were weak retraces, all of these. Weak retrace, retrace, retrace. Now is it going to be reversal? Well, we can see into the future that it does get down below that 15 EMA. Wouldn't want to be holding a buy all the way through this. So how can we determine that? So several different ways. We've talked about them in the other videos, but in this one, we're going to focus on momentum shifts. Momentum shifts. So the indicator I have here, by the way, people always ask this, which is fine. And there we go. There we go. Okay, so this is the MFI, and this is not the only momentum indicator that you can use. It's a good one. It's 14 periods. Not necessarily recommending it. If you're already using a momentum indicator, use that. There's a lot of good momentum indicators. The key is it has to be measuring momentum shifting before price. So here we have that, and it's kind of subtle, but we've got higher high on price, and we've got a little bit lower high on the momentum indicator. So that is, well, divergence, right? Typical divergence. You've all heard of divergences. And there's situations in which divergences are very helpful, such as at the end of a trend. And other times when they're just not as helpful or not as meaningful. So again, the longer we go in the trend, the less likely it is to continue. And so trading this after 5 waves, we had one video on how to measure waves. And so that's when we start looking for these. Not early in the trend, but late in an old trend, because the trend is your friend until the end. So we're looking at the end, which again, we defined as 5 waves, and refer to video number 2 in this series for that. All right, and so now it does get down below the 15 EMA. What we want to do is we want to sell our position before it goes down below the 15 EMA. We don't want to give back a lot of money, right? So we just made, let's say that you took it here, we made all this money, and now we don't want to give back that much. Look at that. That's almost, not quite, but almost about 40% of your gains that you'd be giving back if you waited till there. So no, we don't want that. We need an early indication. And so there it is. Oh, I actually do that pretty well. Okay. So now here's another very, very, very important concept that people often overlook, I find, as I talk with traders. So, you know, for example, there's no trend going on here. There's no long trend. So this topic is about the end of a trend. Now, this is not as easy and it's not going to ever be super precise. It'll be pretty good. It'll be one of those things where it keeps you into the market long enough so you can make some good money. Don't pretend that you can catch the end of every single trend. Just not going to happen. So I'm just trying to bring some realism and have you be realistic about what's actually possible with trading. And what you want to look for is, well, just making a lot more and keeping your winners big and your losers small. As long as you get into that pocket, then you're good, because we're here to make money, not to be right. So we're not trying to predict every penny, pip, or tick on this market. So what I would do here is I would look at, let's see. So this situation here, this is pretty much equal highs. That's pretty much equal highs there as well. So we don't really have the momentum shift yet. Now here we have the higher high, and we definitely have a lower high, very clear. So that's what I'm looking for to get out. So you're in, and it gets a little choppy. Still holds the 15 EMA though. That's one of the keys. And makes a little higher high. Awesome. But then right away again, let's bring up our yellow shading tool. Let's see. We'll do it that way. Good. Yep. So I want to see, something real shift there. And that's where we get it. And so then, boom, I would just get out on the next bar, on the red bar, probably intra bar even. And now, again, to be ethical and honest, we still make a higher high. And I would have not made money on that because momentum shifting here. Now, momentum often does lead price. But I'm not going to know, and neither will you, whether that's going to be the final high or if it will go up one more. So I take the first one. I take the first signal. I just take the first one. As soon as there's that shift there, yep, it might make another higher high. I have no trader's remorse that I didn't get out. Because again, remember, I want to get out before it gets back down below the 15 EMA, before it gets down to this last swing low. And then I got to get out to preserve the money that I've made. And so sure, if it makes another higher high, good. Let somebody else make some money for a change. Okay. Maybe there's someone else trading that. Cool. Let them have the money. It doesn't, and from here to here, that doesn't make much difference anyway, right? If you get out, on the red candle like here, you're pretty much getting out at the same place anyway. So this is what they mean by we're here to make money, not to be right. You trade your rules, and we're not forecasting exactly what the market's going to do. We had a good risk-reward ratio trade here. Beauty, 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 and be happy with the money. Now, take it out and put it into something else that's early in a new trend. In other words, the longer the trend continues, the less probable the trend is continuing. So once you get up into this area here, guess what? You are now in a lower probability trade. When you get in early, you're in a high probability trade, and as it goes, your risk-reward ratio changes dynamically in real time. So you can't say when you're up here, oh, wow, well, I've got this, good risk-reward ratio. No, now your risk-reward ratio has to be considered from here to wherever it's going to go. So as the market trends, and as you're in that trade, your risk-reward ratio gets smaller and smaller and smaller and smaller. So it's dynamic, it's not static. All right, so let's look at one more quick example, and then we will call it that. Done. All right. So now this is another thing you can use here. This is really good. You could use trend lines if you want to. It's not quite my favorite. I prefer to go off the previous swing highs and low, but you could look for a trend line break here. So for example, now the way you do this is we're already up, and then we get into consolidation. Okay, and so when you're in consolidation like this, you can use this for entries now. So we break that trend line here, and then I would actually wait for it to break above that high. Okay, comes back down to it, and so this is where I would like to get in. It's about right there. So you can use these momentum shifts for entries and exits. All right, my friends, well, that's it for today. Hey, go check out indicatorwebinar.com. I've got a great timing tool that I'd love to share with you on that recorded webinar. Go get it absolutely 100% free, and that'll help you with all these trades as well to not only look for price action, not only look for momentum, but then use my market timing entry indicator, and it's absolutely free.